welcome to Bloomberg Quint. You're watching The Fine Print. Last week, Travel Khana, a food delivery service for railway passengers, found that its bank account balance was zero. The tax department had frozen all 4 bank accounts of the company and had withdrawn the entire balance amounting to 33 lakh rupees from them. Founder Pushpendra Singh has stated that in December last year, the tax department had raised a demand of over 2 crores under Section 68 of the Income Tax Law that deals with unexplained cash credits. Singh has alleged that even as the company was in the process of providing the department details of the investors that had put in money in the company, the revenue authorities proceeded to freeze the accounts and withdraw the amounts. Can the tax department proceed against taxpayers in this fashion? And what remedy is available to such companies? To answer that, I have with me well-known tax expert T.P. Ostwal. Mr. Ostwal, welcome to The Fine Print. Before I come to the specific facts of the case, in the beginning when this news broke on Twitter, everybody decried angel tax, once again, and that prompted the CBDT to put out a press release to say that this is not under Section 56 of the Income Tax Law, but Section 68. Do you want to help us understand how to distinguish the demand raised under Section 56 vis-a-vis Section 68?
Section 56 talks of primarily payment by one transfer of money or assets from one person to another person, anybody. So therefore, if the investor has invested the money into this new company, angel investment, which we call, the job of the tax officer is to first of all find it out whether the investor has a capacity to invest and what is the source of fund. To do that, they'll apply Section 68. Section 68 says unexplained investments. If suppose you are not in a position to explain the source of investment, earlier there was only the investor's source has to be explained. But now the investor's source of explanation also is required. This is a dual responsibility added on the person who is in which company they have invested.
Okay, so 56 talks about that any share premium that is
no, not a premium, company. Any transfer from one person to another person.
Okay.
About 50,000 rupees.
Okay.
I give you say 1 lakh rupees, 50,000 will become taxable in your hands.
Okay.
You give it to your sister, it will be exempted because Section 56 has inbuilt mechanism to exempt certain category of persons.
Okay.
But now 68 is draconian. They says if you have not been able to explain your investments in your company, including loan, both, it will be treated as an unexplained investments and therefore we will tax you.
Okay, in the context of startups, what I was requesting you to clarify is this specifically Section 56(2)(7)(b, which is commonly known now as angel tax. That is on share premiums, right?
So far, Section 57(2)(7) was there, but now it is 210. It has gone up to a particular date, but the controversy is for that's 2.7 only.
Right.
In case of Section 56(2)(7), if the investor is a company and investing in your company, then there is some mechanism of valuation which was provided. So Section 68 should not have applied first of all.
Right.
But the officers invariably apply Section 68, which is prima facie defective. Because Section 56(2)(7) had a mechanism. If you have invested in a particular company and the value of that company has been valued on various bases which is prescribed under the law, some cases discounted cash flow, some cases 11 UA, then the question of addition should not take place. But in case of angel investment, it doesn't happen. You are a promoter, you have started with a new idea, you got an investment at say first investment which is disparate for you, so you got at 10 rupees. Within your idea is found to be very attractive. Next investor comes, you say now it will be at 100 rupees. 3 months later another investment comes, I will give you a share at 1,000 rupees. And people are ready to invest because your innovative ideas. And they find that there is success story going on. And somebody else has not been able to find the way you have done it.
Sure.
And after some time 3,000 rupees per share. But what is the basis of valuation? There is no valuation basis.
Right.
It is the beauty lies in the eyes of the beholder.
Right.
Beholder finds that this is the value which is worth, he invests. That no valuation mechanism can work, in my opinion. Everybody who's saying that I have valued the share is a fooling. nonsense. And CBDT found it to be difficult to digest because the taxman never believes. I don't know really whether the taxman can believe his wife at home, whether she is really behaving in the manner ought to behave. But that's the reality. And they don't want to believe that somebody can invest in this value on that basis.
So that's a section 5627 problem where the difference between the tax department and the companies, startup companies, has been on how should you value the company and hence whether that amount should be considered as share premium or not. The case at hand is of a section 68 problem.
Then the moment you find that section 56 valuation is not acceptable, you also simultaneously issue notice. These investments made in your company are unexplained.
Okay. Okay.
When the investments are unexplained, you tax under section 68.
Okay.
Now this section is such a big abuse by the income tax department, honestly, because people must have the old transactions when they were being done in this manner, they started issuing notices to the people, and people have invariably gone to the High Court, obtained a writ, getting the assessment stayed. And High Courts have been very generous in granting, say, stay against 1668 inquiries.
Okay, all right. So I'll come to now what the process that needs to be followed, because I think that's where the problem in the case of Travelkhana arose. The company has, rather the founder has put out a timeline in which the first information seeking notice that the company got was in October. They filed some replies in November. They again got, a letter asking for information as to the details of some 49 investors. The department wanted to get information on the PAN, KYC and income tax return details of these 49 investors. The company sought an extension notice for a month from the department, which wasn't responded to, and soon after a demand notice of 2.1 crores was raised. The company again sought a stay from the assessing officer between 15th Jan and 4th of Feb. It's not forthcoming as to what the response of the assessing officer was to this request, but then the company says, or rather the founder has said, that on 5th Feb they found that 33 lakhs has been withdrawn from their 4 accounts. Can you explain to me then, when a section 68 notice is sent, what is the process that is ideally that the department should follow, and what is the remedy that's there with the company?
See, the whole process has gone in this particular case which you described seems to be as per law. Now, if I respond to the tax officer, don't expect him to reply.
Okay.
Tax officers don't reply. They will straightway send you another notice to appear and explain further. Now, suppose in this case it has happened. They have gone to 1 time, 2 times, and thereafter they are not satisfied. In fact, the high-handedness here which I find is the assessing officer ought to have given a notice saying that I am making an addition. I am not satisfied with your explanation. And therefore I am making an addition to your case. I am proposing to make an addition.
No, so the demand has already been raised in December.
No, the demand is, forget. Sure. The demand is culmination of the order.
Right.
First of all, I am saying in the order.
Okay.
So therefore, I gave you a show cause notice. I am an assessing officer. I gave you a show cause notice. I am going to make an addition of this one. I am not satisfied with your explanation, which has not been done. Which from the seriatim which you have read me, it doesn't appear to be. Assuming that it has been given, and then there is a reply, and thereafter he says, I don't agree with you, and he makes an order. He passes an assessment order. Thereafter, the notice of demand under section under that form number 156 along with the assessment order is sent to the assessing officer by the assessing officer to the taxpayer. Within 30 days he is expected to pay the demand.
Okay.
Within 30 days is time period provided under the statute. However, if the officer feels that the time period should be curtailed, he has to make a specific order. Generally they don't do it. In rare cases they do it also. 30 days time is given to you. The taxpayer's demand, the job is respond to the tax officer saying that kindly stay the demand. Kindly please note that I am filing an appeal against your order. Please stay the demand. Now this demand stay letter, if it is not returned, it means you accepted the demand.
Okay.
But at the same time you file an appeal, it means there is a dispute. When you ask for a stay of demand, you must wait for reasonable time with the assessing officer. Generally, he will not recover till he rejects your stay of demand.
that rejection needs to be again in
writing.
In writing?
In writing.
Okay. And when I'm filing this appeal, I'm going to Commissioner of Appeals, I'm guessing.
You are filing for a Commissioner of Appeal. Commissioner of Appeal will not hear the matter within a year.
Okay.
Maybe 6 months minimum.
Okay.
You have filed the appeal that is pending. Officer is told that you please wait, don't recover the amount.
Officer is told by who?
By the taxpayer.
Okay.
Wait.
Okay.
Don't recover the amount. Please wait. Okay. I'm not saying wait. That's why you felt it that how can I dictate an officer?
Yeah, I know. That's what I meant.
So I'm saying that please wait.
Okay.
Okay, then you will accept.
Because I have filed an appeal against
I have filed an appeal against the order. Please wait. Give me the stay of demand.
Okay.
If officer has to recover and attach your bank account, he has to reject my stay. The moment he rejects my stay, I can write saying that I am going to your higher up, additional commissioner. Officers additional will be senior.
Right.
Sometimes officers passing order is the additional commissioner himself.
Okay.
Then you say I am going to the commissioner. So you ask for time for going to and say in that letter very categorically, till additional commissioner disposes of my letter, please don't recover. He says he will not do anything. Honestly, natural process, he should not do anything and he will not do anything. But the officer's behavior cannot be predicted at times. So therefore, if the additional commissioner also rejects your demand, then you go to commissioner and say that this is the case. And meanwhile, keep your preparation ready. Commissioner rejects your stay of demand application, the officer will attach your account immediately next day. You're exhausted all your remedies. So what you should do in such situation, and which has not happened in this case, looks like the moment commissioner also rejects your demand, keep your writ petition ready and file it to the High Court if the amount is justified, and this amount justifies. Filing a writ petition in the High Court and serve a notice on the assessing officer, I have filed a writ in the High Court against your order. Till the disposal of writ, he cannot do anything. Okay. And if he does that, it is a contempt of court.
Okay.
And for contempt of the court, the officer can be pulled up. Bombay High Court has taken up these matters very seriously. And they have reprimanded even the commissioners. There was a case, his famous case earlier, now there is recently a case against that circular which says 20% demand should be paid. There also Bombay High Court had said heavily, sorry, there is no sacrosanct rule that if the case justifies no payment, we will hear the matter, but you can't recover the matter. Right. So the issue is you must file a writ petition that gives you complete relief till the writ is disposed of. If your case has a merit, it is. But frankly speaking, it was a case of an angel investors. Right. And this has happened recently. Yeah. Matter was discussed by CBDT. CBDT said in case of angel investment, matter should not be, recovery should not be made.
Well, that's the point that the CBDT press release makes, that look, this is not a case of section 5627B in which we have given a commitment that no coercive action will be taken. This is a case of section 68. So, I mean, it's a roundabout way of going after the same company.
Correct. Section 56 read with section 68. Initially, action was under 56.210.27. Then they invoke 68, both are together simultaneously. So one cannot say that it is not under section 56. It is a pure case of high-handedness.
Okay, so assuming, because the founder himself has not mentioned that after they requested the AO for a state, whether or not they went to the appellate process within the department and then on to the High Court. So we don't know whether that happened or not. But usually, if let's say at this stage where the AO has been requested for a stay by the taxpayer, do assessing officers usually proceed in this fashion of freezing your accounts and
generally
actually withdrawing them?
No, generally no. Assessing officer will reject your stay first.
Okay.
And the officers, they are also human beings, and they also are seeing the process of law. So they will reject your stay and then they will proceed to attach your account, maybe same day. You receive the attachment, you receive the lifting of your stay, they said we don't grant you the stay, and then next moment you will find also the notice that they have attached to your account. Once the account is attached, then they are entitled to take the balance from the account. Still there is some liberty given time. The officer, bank manager also may not immediately respond or may not allow them to take the money out. But then they will pass an order against the bank officer, say give me the balance lying in the account against my outstanding liability.
Two things here. Is the department before withdrawing this amount and the bank not supposed to intimate me in any fashion?
No, the law doesn't prescribe, because if there is a demand outstanding against you and there is a bank balance in your account, he can attach the account and take the money out.
Okay, so this is, of course, a peculiar case of a startup, and because it's been making news in terms of angel tax and in terms of various DIPP sort of recommendations. The department has made two important points in its press release: that A, no stay was obtained by the company, that is one, and two, the company or the director of the company did not submit a DIPP certificate indicating that it's a startup, and if it had done so, this process or this action need not have been taken. Is that a valid argument?
The question is whether the officer has also tried to find it out that. Now they are giving this valid reason that because of that we initiated. The officer ought to have done this. Now what is the reason for you to explain that this was the reason why we have went ahead? In a case of a startup, it's a new business, somebody has angel investment has taken place. DIPP process has been obtained or not is irrelevant. The DIPP process has come very recently. But before that, what was the DIPP? There was no DIPP process. So they have proceeded against the company and just recovered the amount.
No, I'm saying that, I mean, potentially if the company could have produced, according to the CBDT, this DIPP certificate, then it wouldn't have come to the company losing all of its sort of
No, we know the cases where assessing officer, even after that also they recovers. Then what will you do?
So after they have the DIPP certificate?
So therefore that is exactly, precisely the one point which I feel what you are saying is correct. The company must have not applied for the stay of demand. Which is very difficult to assume, very difficult. If they have a chartered accountant who is advising, he will, all this is a routine process. If something doesn't happen in my office like this, then we will just fire that person. That's the reality. It's not that I am saying jokingly.
Okay.
Any stay of demand, any notice of demand comes in, first we must study the papers. To study, we should file first of all an application for stay of demand. There are two stays we ask for. One is stay against the demand, and second is penalty process should be stopped immediately, because otherwise they send you a notice along with this recovery of demand, along with the outstanding demand, a notice for levying penalty. Now the notice of levying penalty means you have to respond, file a paper, everything. So we say that we have filed an appeal or we are filing an appeal, and therefore penalty proceedings should be kept in abeyance.
Okay.
Because if you do not keep in abeyance, they will levy the penalty, another demand will come up.
Sure. Okay. So this is a specific case of Section 68 and a startup, etc. But in outside of Section 68, does the law give the assessing officers and the tax department this overarching power for any statutory tax demand raised against you?
Barring Section 68, right. No.
Okay.
No. Section 68 for unexplained investment, Section 69, Section 68A, there are 5-6 series of sections after Section 68, 69, etc., etc., wherein there are unexplained investment, the unexplained expenditure. All these are the provisions which they have statutory powers to inquire. And if you are not satisfying the officer, they will disallow the payments.
Okay, so only on some of the limited sort of grounds can the department proceed.
But these limited grounds are very wide powers.
Okay.
Grounds are limited, but the powers are enormous. They will ignore a particular explanation given by you and say we are not satisfied. What do you mean by not satisfied? But give me a speaking order why you are not satisfied. They don't write any speaking order. Now say for example you have invested in my company. I have to explain your investment. Where from you got this money? How do I, till you tell me, how do I know about it?
And like this company has also pointed out.
No, second thing, honestly speaking, this is such an obnoxious provision. Income tax department today says you are compulsorily required to file a return along with the PAN number, along with the Aadhaar number, along with the moment PAN number and Aadhaar numbers are linked with each other. And with this linking, you can find out the bank account of that the person investing. If you have got ability to find out all these things yourself, why do you expect the taxpayer to give you all the details?
To be fair, in this case, they wanted the details of the investors, which the company has pointed out not many investors or not all investors are forthcoming with that information.
Precisely, I am saying you, 49 investors have invested. Now they have given PAN number of these all investors. Let's assume, because today you will not take any investment from anybody without at least obtaining PAN number.
Okay. Okay.
Having given a PAN number, I suppose it is a genuine. If it is not genuine, then the officer is entitled to do that. Genuine PAN number is given. PAN numbers are by and large linked with the Aadhaar, and with these two linkage, PAN is mandatory for a bank account. Officer can find out his financial transactions. But he does not want to do, because he wants to do high-handedness. He wants to either make money from the taxpayer or use these provisions. These provisions are by and large used where the taxpayer does not pay money to the tax officer.
Okay.
This is one angle of a corruption in the department.
Okay, all right. So we've talked about in detail about the problem itself. What is the remedy available to such companies? Because as this company has pointed out that while Akhilesh Ranjan facilitated the defreezing of the accounts, etc., but the money has not in them has not been returned, and they've got some assurances as to the appeal process that can be expedited. But what is the natural course in a case like this from here on?
So what you mentioned about Akhilesh Ranjan's name is one of the finest tax officer in India. He goes out of the way to help the people if the case is found to be genuine.
Sure.
The finest officer.
Okay.
And therefore, if he has helped, still the department has not
returned the money.
Returned the money is unfair.
But there has to be a due process for it. It can't be that a phone call can happen and the
no.
returned.
Then the question is phone call. He would make a phone call. He must have seen that
Sure.
this is high-handed.
Surely, but what does the company now need to do?
The company need
ensure?
to then obtain the tax officer. Generally when the tax demand is recovered, monies are recovered, they don't refund the money. But if the company startups business is going, they become bankrupt because of this recovery.
Sure.
What the hell they can do it?
So can they at this stage now file a writ?
No, they should file a writ and get the money back from them.
Right, that's what I meant. They should file a writ.
In the case where the tax officer was asking for more than 20% demand to be paid, the taxpayer says, I don't have money to pay. They went to High Court. High Court stalled it. And if you have recovered, the High Court can direct refund the money.
All right. So seems
the High Court's order becomes binding.
Okay, so seems like the next course of action available for this company is to file a writ in the High Court.
My advice was that they should have gone into the High Court long before.
Okay.
No need to wait for such a long time.
All right.
These officers also have limitations. Those who are not corrupt, let me speak for everybody.
Sure.
They feel that I can be subject to inquiry because I have done a favor to somebody. So you better go to the court and obtain the order.
Sure.
I will give you a refund. I'm not saying that the officers, all officers are a similar type. There are good officers and bad officers, which is there in everywhere. Not that only income tax department, even in private sector also it can happen. So therefore, in such situation, the job is to go to the court as quickly as possible and get the remedy.
Well, I guess, and that's one sort of aspect that the startups keeps talking about, that we can only run our business, and how much of compliance and appeal process that we can deal with in the course of running a new business.
Unfortunately, the way in which Income Tax Act has been amended, particularly in last 3-4 years, it is a nightmare to do business in India. Nightmare is the only word. You have got section 5627, you changed it to 56210. Now anybody doing any transaction with anybody of any amount, excepting more than 50,000, in respect of the specified assets, gone. You have to prove and establish. Very, very dicey job. And that is one draconian effect, is doing business in a country. Prime Minister says startup, doing business, make in India. But these people are here to see to it that you don't make it in India, import it.
Right, of course. It's harrowing to deal with it on a daily basis and keep going to the tax department to make your case. Mr. Ostwal, thank you for explaining us the process and what could be the potential remedies for Travelkhana and companies like that. And thank you so much for watching.
Thank you.